Assalamualaikum warahmatullahi wabarakatuh. First, praise and gratitude we can say for the presence of Allah Subhanahu wa Ta'ala so that we can gather in good health this day. Secondly, salawat and greeting to the Prophet Muhammad Sallallahu Alaihi Wasallam. And I would like to say thanks to my beautiful lecturer, Ma'am Irmawati, and all my friends. Okay, let me introduce myself. My name is Utari Ainil Ilmi, with registration number is 36120066. Today, I want to explain about accounting for receivable, which study object 5 is compute the maturity date of an interest on notes receivable. Determining the maturity date. When the life of a note is expressed in terms of month, you find the date when it matures by counting the month from the date of issue. For example, the maturity date of a 3-month note that my one on August 1, a note drawn on the last day of month mature on the last day of subsequent month. That is, a July 31 notes due to month mature on September 30. Okay, when the due date is term of days, you need to count the exact number of days to determine the maturity date in accounting. Omit the date the note is issued, include the due date. Okay, next is computing interest. Computing interest is dictated in chapter 3. The basic formula for computing interest on interest bearing note is fetch value of notes multiplied by annual interest rate, as time in terms of 1 year is interest. In interest rate specific in a note is an annual rate of interest. There are many different ways to calculate interest. The time factor in the formula in illustration 913 expressed the factor of a year that is not is outstanding. When the maturity date is set in days, the time factor is often the number of days divided by 360. When the due date is set in months, the time factor is the number of months divided by 12. Okay, the next sub-material is how companies recognizing notes receivable. To illustrate, the basic entry for notes receivable. Assuming that column company wrote the note to settle and open account, Wilma company makes the following entry for the recipient of the note. For the journal, you see on screen. Okay, the company record to note receivable at this face value. The amount shown on the face of the note. No interest revenue is reported when the note is accepted, because the revenue recognizing principal does not recognizing revenue until earned. And an interest is earning accurate is time passed. If a company lends money using a note, the entry is a debit to notes receivable and a credit to cash in the amount of the loan. Okay, I think that's all from me. Assalamualaikum warahmatullahi wabarakatuh.